Hello, and welcome to the Wade Borth Podcast. I'm your host, Wade Borth, and in every episode, my goal is to get you to think differently about how money works and ultimately to empower you to take control of your money and your personal financing system. Hello, and welcome back to the Wade Borth Podcast. Today, we're going to ask a question. The question, is whole life insurance the greatest savings vehicle ever? That's a little bit subjective, so it depends on how you want to look at it. But let's make a case for it. I'm going to answer the question, yes, it is. It is, to me, is absolutely the best savings vehicle ever. And you're going to say, well, of course it is, Wade. That's the industry you're in. That's what you do. I'm like, yeah, that's true. And that's why I'm here. I have a passion for this product. I have a passion for this industry. So the question is, why do I think it's so valuable? And why do I think it's the greatest savings vehicle ever? Notice I didn't say an investment, because it's not an investment. Let me just say it again. People that come to this idea that whole life is an investment and they want to compare it to investments they're comparing apples to, I don't know, streetcars. It has nothing to do with each other. It has a specific purpose and it does specific things. It doesn't do things it's not intended to do. So let's talk about some characteristics of what a whole life, especially a properly structured whole life policy, looks like. So one of the things that I love about it is that it's a long-term product. Because right now in today's interest rate environments, there are people saying, hey, I can go get a better rate of return or interest rate on a money market or a CD or something else along that lines than I can in my policy. And I'll say, yep, probably can. But are you thinking long-term or are you thinking short-term? You might say, well, it doesn't matter. I can go get 5% for 1 year. Well, what's next year bring? Where was that 3 years ago? Where was that 5 years ago? Right? We got to stop thinking short term. If we really wanted to control our lives, control the parts of our lives, we have to think long term, because if the idea is I'm only going to live another year, then yeah, that's probably the best solution. Go find that 1 year CD that's paying you 6%. But are you planning to be here a very long time? I make the case that hopefully you are. If you're somebody that's listening to my podcast and you understand what I believe in, what my belief system looks like, I know for sure that you're planning to do this for a very long time. Your vision is probably not even your generation, but maybe multiple generations. If you believe like I believe, I'm here to influence myself and my peers around me and my group of people that want to hear my message. Even more importantly, what are we doing to impact that next generation? What am I doing to teach my son? What am I doing to set him up for success? Not through money, but through knowledge and understanding. So again, if you're thinking long-term, this probably isn't a real surprise to you, but I just want to reinforce this idea. Why do I love whole life insurance as a savings vehicle? It's a great savings vehicle because it has some key characteristics. Right? One of them is I know 10, 15, 20, 30, 50 years from now what my value is going to be. Think about some certainty. Let's go back to the idea of certainty versus uncertainty. Do you prefer certainty? Do you prefer uncertainty? Right? That's the question. I know what my exit strategy is with my policy 5, 10, 15, 50 years from now. I know what that exit strategy is if I die. I know what that exit strategy is if I don't die. So it's the vehicle that gives me the kind of certainty that I need, that I can actually start making plans for. Just think about that. If you're certain of what the very least amount of money that you're going to have in an account is going to be 10 years from now or 15 years from now, when you start making plans to either maybe loan money for a business, so you're going to be a hard money lender, you're going to invest in your business, you're going to do other things, you're going to buy real estate. You need to know, you have to have some real certainty what your cash and your cash flow is going to look like. If that's secured in your policy, in your savings vehicle, then you can go make much more informed decisions, much better decisions. That's why I think it's such a great vehicle. Think about the guys that I ran into, a group of guys that said, hey, I can take money and we're going to ladder some bonds and some short-term treasuries and we're going to try and get this yield because we don't want money to sit and not perform because inflation will eat it up. I'll say, yep, you're exactly right. But what if there was a better way? What if there was a better way? Would you be open to the idea of looking at something that's better than trying to do all that yourself? Well, this thing called whole life insurance from a dividend-paying mutual insurance company does just this. It's professionally managed. Really, it's a professionally managed bond and real estate and mortgage portfolio that's done at an institutional level. Think about this for a second. That's guaranteed never to go backwards. So let's just tear that apart just a second. is professionally managed. Now, again, some people are going to say, hey, we're going to go out and we're going to buy U.S. Treasuries. We're going to buy 60, 90, 120-day notes, and we're going to ladder these things. And I'm like, okay, that's being done, but that's being done at an amateur level for the most part. I'm not saying that you're amateurs if you're doing that, but I see a lot of people trying to emulate that. Well, what if you had a professional doing that? And now we can expand it and say, well, let's think long term so we can get better yields and we can have some more certainty out, because what is that rate going to be 6 months from now? What's that rate going to be 6 years from now? We don't know. That's the whole problem. So let's find some certainty. Let's give up maybe a little bit of short-term rate so we have some more certainty. Because again, the value that you're going to use with those dollars isn't what you're making inside the policy. It's what you're doing outside that external rate of return we'll talk about. So now we have professionally managed bond and real estate mortgage portfolio. And there's other things in there too. But for the most part, that's what these insurance companies, that's what One America does with their dollars. They go there and they say, we want to make sure that we can pay a claim, not just 30, 60, 90 days from now, but 30, 60, 90 years from now. So they're going to be professionally managed. They've been doing this a long time. So it takes the risk off your shoulders. So professionally managed bond and real estate and mortgage portfolio. Done at an institutional level. So let's talk about being done at an institutional level. Do the big institutions get better deals or worse deals than the average Americans? I would contend that they get a better deal. Think about that. You're trying to go out and do something, and maybe you can professionally manage that portfolio, but are you getting the deals that these guys can get? Are you getting the institutional pricing that these big institutions are getting? Because they can buy much bigger blocks. They can move the market sometimes. So that being said, again, why are we trying to do it ourselves? Why do we think we have to be the professional here instead of hiring the professionals? Now let's go to the last part of what I was saying. Again, professionally managed bond and real estate and mortgage portfolio done at an institutional level, where our dollars are guaranteed never to go backwards. Think about that for 1 second. Guaranteed never to go backwards. Why do we want to take that risk to maybe get a little bit more when we can take our own dollars, guarantee that they're never going to go backwards, and let somebody else take the risk of trying to manage it? And let's take the big institution and their leverage, along with everybody else that has policies with these big insurance companies or One America, or whoever it might be. They have dollars stuck there. Large institution making trades for us and guaranteed never to go backwards. Can you find a better savings vehicle long term? Now, the part that we haven't talked about is that this thing is contractually guaranteed. So think about that. All the things we just talked about, our ability to borrow against it, contractually guaranteed. Do we know what the value is 10 years from now, 20 years from now, at the very minimum? Contractually guaranteed. If I graduate from this earth, if I graduate early from this earth, it's got a predetermined amount that's going to pay my beneficiaries, my son and my wife, my trust. Contractually guaranteed. Okay, all by itself, that by itself is a super strong story. It's the fact that it's contractually guaranteed. But now let's think about how we can accumulate our dollars and put it with somebody, an institution that can actually grow this. I mean, I hear all the time where insurance companies are the big evil insurance companies. Well, the problem is that these are mutually owned insurance companies, right? What does that mean? It's owned by its policyholders. So if they're big and evil and they take somebody of the cleaners to make a profit, what do they have to do with those dollars? By law, they have to return those profitability back to their policyholders. So what's the incentive that they're going to take people to the cleaners? It just drives me crazy when I think about these financial entertainers that just rail against insurance companies. I'm like, these are the greatest institutions in the world. Again, all the things I talked about, these contractual guarantees that you get, these professional money managers, large institutions managing your money, guaranteeing that's never going to go backwards, and then giving you access to their dollars by just using yours as collateral. That's a huge benefit and all this stuff. So why is that not the greatest savings vehicle in the world? Well, it is. But why do people think it's not? Because there's been a bit of conditioned thinking or brainwashing. And so I would just say, and one of the things that Nelson talks in his book is like, rethink your thinking. Look at the characteristics of the greatest savings vehicle of all times. Again, if you want to think short term, if you think, hey, I want to get 6%, but I have no clue, no idea what a year from now or 2 years from now is going to bring, well, then you're probably not going to want a policy that's properly structured and it's going to give you a ton of cash and it's going to give you a great rate of return for the long term and all the other benefits we have, like the guarantees of never going backwards and be able to borrow against it, privacy from the rest of the world and really taking off the tax radar. All these things, these benefits that we talk about life insurance, it makes the best savings vehicle of all times. And when you have the best savings vehicle of all times, now you can start making strategies of saying, okay, how can I now magnify the use of those dollars by going out and borrowing against it, using the insurance company's money, and going out there and finding other ways to grow my assets and grow my net worth as well as cash flow. Because ultimately, that's the end of the day. That's what we want as a cash flow that's going to pay for all our expenses. That's the definition of winning the money game. But you can't do that until you start saving dollars, right? There's no shortcuts to that either, by the way. You have to save your dollars. You start saving your money, right? Save anywhere between 10 and 30%. And I heard Grant Cardone saying he used to save 40% of his income. And once you start saving that and you save it in the right environment, that's what we're talking about. What's the best savings vehicle of all times? It's not the bank. It's not government bonds, T-bills, whatever it is. Why would you save your money there? Why don't you save it with like-minded people that enter into free men entering a contract together? That's where you want to save your dollars. That's what makes this the most fabulous product in all the world for savings. And now, once you have that savings built up and you have those dollars available, then you can take those dollars and let's find a way to create a passive cash flow in some business that you want to do, some passion that you have. But it's going to take time and it's going to take discipline and it's going to take money because none of this happens without a plan to make it happen. So give us a call. Reach out to me. I'd love to have this conversation with anybody that wants to think bigger and then say, well, I've been told this, but I'm willing to set that aside because I want to think more independently. Right? I want to have an open mind. So the question is, are you open-minded enough to have that conversation? Say, okay, Wade, tell me more about this because what you said is intriguing me. I want to hear more about this. Love to be able to have that conversation with you. So reach out. Let's have a conversation. Again, whole life insurance with a mutual insurance company, a good, solid mutual insurance company, is the greatest savings vehicle of all times. And will always be the greatest savings vehicle of all times. It's so great that even the large banks save their money there. That's how funny this is. They'll tell you what to do with your money, but they're not doing the same thing with their own money. But they're saving their money with large insurance companies. I'll leave it with that. I'd love to have a conversation. I'd ask that you reach out to us. Send me an email, wade@sagewellstrategy.com, wade@sagewellstrategy.com, and love to have that conversation with you. Because again, saving your dollars, having it secured, being it contractually guaranteed is one of the greatest avenues to certainty that you can have with your money. If you're enjoying this podcast or you know anyone else that might be interested, please be sure to hit the subscribe button and please leave a review. This will help this podcast reach and help more people by ranking higher in searches and ultimately help more people get out of financial bondage. And don't be afraid to share this podcast with your friends and family, as we can be easily found on Apple Podcasts and Spotify.